Welcome to Looking at the Markets with David Modell. Today I wanted to give you a double Bollinger Band strategy. We're going to put not one but two Bollinger Bands on the screen, and let's see what we can do with that. Alright, here's an example, and this is a close-up, and all these charts today are from stochastics.com, so I wanted to give them credit for that. Alright, so sometimes when I teach people about Bollinger Bands, I might tell them, okay, you can use the, now this is the 2 standard deviation Bollinger Band, and this is, all these charts today are on a daily candlestick chart, so each candlestick represents 1 day of price action, and the blue lines here, those would be the 2 standard deviation Bollinger Bands. Alright, and that's the standard setting that you'll see. So yeah, sometimes I might teach people that you can use this, the bottom band as a potential buy signal, and then you can sell when it reaches the upper band. But sometimes people complain that they're not making enough money from this method. They want to let it run more. For example, in this example, as you can see, if you bought here at the lower band and then sold at the upper band, you'd make a profit, but you could have made a much greater profit. You could have let it run a lot more. And so what you could do is put on the screen not just the 2 standard deviation Bollinger Bands, but also the 3 standard deviation Bollinger Bands, which are the red lines here, and those are much wider. And so in order to let your winners really run, you can buy at the lower 2 standard deviation Bollinger Band like you normally might do, but then don't sell until it hits the 3 standard deviation upper band there. And as you can see, it's really running here, and you would make a much bigger profit potentially than if you had just sold here after buying here. Alright, and this is what it looks like on stockcharts.com. This is the standard settings. You go down to overlays after you plot your, you put your chart up, and then you go to overlays, and then you put your Bollinger Bands on. For the standard settings, 20 and 2, that's 20 period and 2 standard deviations, and then you put another Bollinger Band on, but this time you have to change it from 20 and 2 to 20 and 3 standard deviations. Alright, so it's wider. Alright, so let's look at some examples. This is Expedia, and for example, if you had bought here when it touched the lower 2 standard deviation band, and then you would have ended up selling here if you just stuck with the 2 standard deviation bands. But if instead you waited until it touched the 3 standard deviation upper band, which is way up here, you would have made a much bigger profit. So it's all about letting your winners run if you use this method. Alright, here's another example. This is Cigna, and if you had bought here when it reached the lower 2 standard deviation Bollinger Band, and then it went down a little bit, and if you had sold when it reached the upper 2 standard deviation Bollinger Band, you would have made a profit, or you could have let it run, and it would have run and run and run all the way up to here if you had decided not to sell until it had reached the upper 3 standard deviation Bollinger Band, the wider one. Here's another example with Pepsi, and this is a really great example because if you had bought when it touched the lower 2 standard deviation Bollinger Band, and if you had done the typical thing of selling when it reached the upper 2 standard deviation Bollinger Band, you would have made a profit from here to here. It's not bad, but you could have also let it run. You could have decided beforehand, I'm not going to sell until it reaches the 3 standard deviation Bollinger Band, and then you would have bought here, and then it would have run all the way up to here for a really nice profit. And one more example, this is eBay, and again, you could have bought at the lower 2 standard deviation band, went down a little bit, hopefully you wouldn't get shaken out. Alright, and then if you decided to sell at the upper 2 standard deviation band, you would have made a profit from here to here. You would have sold here, not bad. Or you could have let it run. You could have decided, I'm not going to sell until it reaches the 3 standard deviation Bollinger Band. And then it would have run all the way up here. It almost touched it here. Even if you had sold here, that's still better than here. But it didn't quite touch it here. And notice that it went down. But if you had been patient, here's a double bottom pattern. Just wait it out, ride it out, and finally you would have sold way up here, and you would have made a profit buying here, selling way up here. Hopefully you didn't get shaken out with this double bottom pattern here, and you would have done really nicely. All right, so check that out. Put on not just the standard settings, the 2 standard deviation Bollinger Bands, but throw up the 3 standard deviation Bollinger Bands if you want to use this double Bollinger Band strategy. All right. So hopefully this was helpful to you. If you need more help with technical indicators, trading, investing, options, stocks, whatever it is, you can contact me anytime by email. My name is David Modell, and my email address is davidmodell@gmail.com. And if you like this video, if you found it helpful, please give it a thumbs up on YouTube and leave comments, and please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. Thank you so much. I appreciate it, and I'll talk to you again soon.